Hello and welcome. You're tuned into Market Fatafat on ET Now. I'm Shrishti Sharma and with me is Vinny Motiwala. And viewers, over the next 1 hour, we will be highlighting all the buzzers in trade today, either on the back of the news flow or on the back of the technical. So let's get started. And Vinny, firstly, on the market action, quite a volatile day coming in because we are off the day's highest point, but nevertheless seeing mild recovery from the day's lowest point as well, especially for Bank Nifty.
Absolutely, a bit of a recovery is at least what we're witnessing, but yes, clearly off that day's highest point, we managed to actually go above the 22,000 mark, but again, as of now, it's trading below the 22,000 mark. That's the Nifty for y'all. But also, let's pull up the Bank Nifty, like Shrishti was mentioning as well. So where is that headed in terms of the Nifty Bank? Yes, Nifty Bank managing to hold on to that positive side. As of now, just a mild uptick in terms of the positive side is at least trading a bit in the green as well. So yes, recovered from the red but to the green, but still very subdued over there. PSU banks, that's continuing to see the rally on that front. Nifty PSU Bank, Nifty Realty among the top sectoral gainer today, and that's what's managing to pull up the markets as well and holding on to those gains over there. What's not doing well today is the Nifty IT. That's down almost 1% as well. So yes, Nifty IT clearly under pressure. Other than that, we have Nifty Auto, which is trading in the red as well. So yes, Nifty IT, Nifty Auto clearly seeing a bit of a subduedness there as well. And Nifty Auto recovered from the day's lowest point, trying to inch up to that green mark. That's something that we should watch out for as well. A lot of individual movers in trade that are buzzing away is also, as of now, when you look at it, we have Trent, Delta Corp, Chambal Fort, Canara Bank, Canfin Home, all these are among the top F&O gainers as well. And Trent clearly shaping up because of its numbers, but we'll talk more about that, once we get started with the show. And to get started with the show, let's bring on board Nagaraj Shetti to talk to us about the technicals. While from the research team, we have Ashesha as well as Ankita joining in with us as well. A very good afternoon to all three of y'all as well. And like I was, Shrishti, let's start with your first talk. I believe we're going to talk about EIH and a earnings candidate?
Well, yes, an earnings candidate and no stopping since the start of the day, because that's on the back of the earnings, the kind of jump up we are seeing on EIH, where the consolidated revenue has come in at 241 crores, and that's a jump of 26% on a YOY basis. And look at the jump with the profit, 55% uptick on a year-on-year basis. 230 crores is what the company has reported. EBITDA 2 has grown by 55%, and the margins have seen a significant improvement, almost an 812 basis point improvement from EIH this time, and 44% is what the company has clocked in. So across all the parameters and headline numbers, we are seeing great numbers from EIH, and nevertheless, the kind of earnings that we are seeing coming in from this particular sector is definitely gaining momentum, and EIH is one such stock which yet again has posted good set of numbers, and the stock is also holding itself in the green with a gains of around 15%.
Okay, let's move on. Talk about another earnings candidate, and that is Trent. That is up 10%. Just reported its numbers a short while ago. Do not forget, Trent had seen a fall coming in the last 3 days in terms of the stock price as well. But today, after its numbers, post that subduedness that we saw in the stock, look at the jump up that we saw. 10% uptick, locked in upper circuit as of now as well. So decent set of numbers that came in from the company. When you're looking at it in terms of revenue growth of around 50%, profits have more than doubled as well. Margins, a strong expansion on that front. Do not forget that Trent has those value models as well. Zudio, which has been doing quite well for the company, even Westlife, that has Westside, I believe, so I beg your pardon, has been doing quite well for the company as well. So yes, that's the key factor. One could say that because of the value model that they're following, they have managed to see a good growth as well. Other than that, let me just highlight some of the key press release lines that we are seeing coming in. One, in terms of the gross margin profile, the company highlighted that Westside as well as Zudio continue to remain consistent in terms of the performers with earlier trends compared. When they're looking at the fashion concept, that registered an encouraging trend in terms of growth over 10% on a year-on-year basis as well. They'll be focusing more on value customers. That's been the trend for the company, right? Zudio has been a very big success story for Trent. Emerging categories also, the company highlighted, has been seeing a very good growth. Whether you look at a beauty, personal care segment, innerwear, footwear, that's continued to see good traction for the company. And overall, during the quarter, they managed to add 5 Westside stores, 50 Zudio stores, and this is across 36 cities. and including 13 new cities as well. So surely that value model expansion, they're saying that the growth has been so encouraging for them that that is something that they will continue to focus on in terms of their expansion as well. And that's the strategy, seems like that is working out for Trent as well overall in terms of the value model. So that's why we're keeping an eye out on Trent today, locked in upper circuit after we saw a good set of numbers that was reported by the company. But do not forget, we had already seen a bit of a selling and correction that came in the last couple of days as well.
Well, yes, no stopping for Trent for now. But with this, let's move on. And Nagaraj, coming to you, let's talk about your first stock, and that is CDSL. This counter was also on the move. Tell us what are the next levels that you're tracking for this one.
Yeah, hi, good afternoon. If you look at the long-term charts of CDSL, it has been continuously moving up over the last many months. We have seen higher tops and bottoms on the technical front, which indicates a strong upside momentum for the stock price. Recently, what we have seen in the last month is a downward correction that ended in the last 2 weeks, and the stock has bounced back and witnessed an upside breakout of the bullish flag type pattern around 1900 levels. The overall chart pattern is looking positive. The volume is breaking out during the upside breakout in the stock price. I'm expecting 2200 level, which is the next set of resistance for the stock price over the period of time.
Okay, that's CDSL for y'all. But Ashesha, Radico Khaitan, that too reported its numbers. How are they looking like?
Well, yes, very strong set of numbers. The stock is off the day's highest point, but despite that, it is sitting on with gains of nearly 1.5% as we speak. So revenues grew by as much as 47% on a year-on-year basis, and growth this time around was led by P&A segment. So prestige and above segment volumes grew by as much as 20% on a year-on-year basis. Overall volume saw growth of about 4%, and that is because of poor performance from the popular segment, which declined. Volumes of popular segment declined by as much as 11 to 12% on a YOY basis. All in all, numbers were very strong. Net debt has also declined by 15% sequentially, and analysts believe that declining net debt trend actually implies that the peak debt cycle is perhaps behind for the company. Apart from this, Investec has also come out with a note where they say Radico continues to deliver strong earnings growth in spite of ENA-led headwinds. So yes, it's a good set of numbers. The stock, as I mentioned, is off the day's highest point, but despite that, 1.3% higher in trade.
Okay, that's all about Radico Khaitan. But Nagaraj, the next stock is HEG. Tell us how you're tracking this one and how is it looking on charts?
Yeah, this week's move in HEG has surpassed the previous few weeks decline in the stock price, and currently the stock price is placed at the edge of showing decisive upside breakout of the downsloping trend line. Technically looking very positive. Volume is also rising during the upside breakout. I'm expecting this 1950-60 breakout could lead the stock towards the next overhead resistance of around 2180, 2190 levels in the next 1 month.
That's the word coming in on HEG. Let's keep an eye out on those levels over there. Before we go to Ankita for Ashok Leyland, let's just mark in the flashes that are on the bottom of your screen as well, and that is Safari Industries. They reported their number. Profits of the company, 43 crores was 34 crores, almost a 25% uptick. Look at the stock price as well. We've seen it trading with gains of 3%, but that's been since the get-go. A slight bit of a spike up that came in terms of the numbers once the numbers were reported. But yes, profits at least seeing a good growth on that front. We'll wait out for revenue. Yes, that's seeing a 28% growth as well. So optically, the first look that we're seeing at the numbers seems like a decent set of numbers that has come in from the company. Let's keep an eye out on that. In terms of the operating performance, also has managed to see a decent growth as well in terms of EBITDA, 24% growth on that front as well, and margins likely to have seen an improvement over there as well. So yes, Safari Industries is also in focus on the back of its numbers. They're just flashing on the bottom of your screens. But let's go to Ankita then. On Ankita, Ashok Leyland,
of a good 4% coming in yesterday. They reported a good 60% surge in their profits, but today a couple of brokerage note came out on Ashok Leyland. Currently we do see some bit of a profit booking happening there, and the stock is down 0.6%. But let's go through the notes that came out. One was by Nomura, and they're maintaining a buy, and they've hiked the target price to 223 rupees from 211 rupees per share. They feel that the Q3 margins have been way ahead of their expectations. The CV category growth is likely to resume post Q2. The upcycle is likely to be driven by growth, and benign competition is a key lever for margin expansion for the company. And then the next note is by CLSA, and they are also maintaining a buy on the counter with a target price of 238 rupees. They feel that the focus is on margin improvement for the company. The sequential margin improvement points to strong pricing discipline. Also, yet again on the CV industry outlook, it remains strong for FY25, and unlocking switch is likely to create value for the company. On the back of that, they have also maintained a buy on Ashok Leyland, but currently the stock is trading with a downtick of 0.6%.
Okay, that's the updates coming in from Ashok Leyland and Brokerage Notes. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Market Fatafat, a show where we are highlighting all the buzzers in today's trading action. And let's talk about the PSU major Canara Bank. This counter is in focus as the company has announced that the board of the company will be meeting on 26th of February to consider stock splitting their equity and that the board will decide on 26th of Feb. The move will require the prior approval of the RBI as well, is what the company has informed the exchanges. On the back of that, the stock is definitely roaring in trade today. Almost a 5% uptake is what we are seeing on Canara Bank at this point in time.
Okay, that's the word on Canara Bank, but let's move on and talk about Nykaa. Yes, they did report their numbers. It was a decent set of numbers that came in from the company in terms of Nykaa. But what is also interesting is let's highlight about the con call, right? Because in terms of con call, we had some recent highlights that came in on that front. One, they said in terms of the discounting in the beauty that has gone up, and that is something that affected the margins of the company. But in terms of the BPC segment, they said that they right now want to focus more in terms of the growth than in terms of the margins and contribution margins. So contribution margins could be around these levels because they will be focusing in the short to medium term, is what they are highlighting, that they will be focusing on growth versus the contribution margins or margins in the BPC segment. So yes, that's what we're keeping an eye out on. Other than that, in terms of the fashion segment, you know, they did make the recent acquisition of Foot Locker. So sneakers is something that has been doing well, and you know, they believe that that's a huge opportunity for them and for Nykaa Fashion specifically to see in terms of growth. Nykaa Fashion, the base is much lower, so yes, the growth has been good as well. BPC growth seems to be good, but not as much as one was expecting. So yes, keeping an eye out on that as well. Overall, the company had to give higher discounts this time, and that is mainly because of the rural demand that has not seen a recovery. That was something that impacted the stock. And you know, mainly the focus is now going to be on getting new customer acquisitions. Priority is going to be growth versus a margin. So margins could be subdued in the near term as well, and that is the key factor that one should be keeping an eye out on from Nykaa. As of now, trading with cuts of almost 1.9%.
Alright, let's also mark the flashes on the bottom of the screen. AIA Engineering is the counter that has come out with its earnings, and post the earnings, a sharp fall is what we are witnessing on this particular counter, almost a 4% downtick as of now, because the numbers look bad on the frontline numbers. The revenue is seen to be down about 5% on a YOY basis. The net profit has come down by 21% at 280 crore rupees. The EBITDA is also fallen by around 15%, and the margins have squeezed from 29.8% in Q3 of FY23, and this time the number is at 26.6%. So across all the headline numbers, a weak set of numbers coming in from AIA Engineering, and hence the fall is what we are witnessing on the stock. But moving on then, and Nagaraj, let's talk about DLF. No stopping for this particular counter. What are the next levels that you are looking out for?
Yes, rightly said. It has witnessed an excellent uptrend over the last 5-6 months. What we have seen during this period is a limited decline and sharp upside bounces from the higher bottoms. So this is what exactly happened in the last month, when the stock made a new higher bottom somewhere around 750 and bounced back in the last couple of weeks. The overall chart pattern is looking very positive, and 950 is the next set of resistance. What I'm looking this stock to be reached at within a month of time.
Okay, keep an eye out on DLF. Surely a one to watch out for and trade. But Ashesha, Naveen Florine, why is this one in focus?
Well, yes, very weak set of numbers. The stock, in fact, is declining as much as 5% today. Very weak as compared to estimates. Revenues have come in at 502 crores, which is an uptick of 6.5% on a sequential basis. But margins have contracted this time. EBITDA margins have come in at 15% versus 20.8% that the company had reported in the previous quarter. So, on a sequential basis, margin contraction of about 580 basis points is what the company has reported. Company says that postponement of some key molecules and inventory destocking led to poor performance in the quarter gone by. In fact, Motilal Oswal has actually gone ahead and cut its revenue and EBITDA estimates for FY24 by as much as 4 and 17% respectively, and they've also cut estimates for FY25. Revenue estimates cut by 8% and EBITDA estimate by 15%. So very weak set of numbers. Brokerages have also given a thumbs down. We've not seen any recovery. The stock, in fact, sitting with cuts of nearly 5%.
Okay, moving on then. And Nagaraj, let's talk about Intellect Design. What a breakout on the charts is what we are spotting. After April 2022, the stock is surpassing those levels and finally reached that 1,000 mark. After this, what are the next levels you are tracking?
Yeah, overall chart pattern, rightly said, it has been showing a phenomenal up move for the stock. We have seen some smaller consolidation recently, and this stock has overtaken the hurdles one after the another. Currently, the placed at the edge of another breakout around 1010 odd levels, and on this breakout, I'm expecting the stock to move towards the next resistance of around 1085 to 1090 in the next few weeks.
Okay, let's move on to stock number 12 for today, and Delivery. Ankita, I believe there's some brokerage note on Delivery today.
That's correct, Winnie. Delivery also came out with its numbers yesterday, and it has posted its first ever quarterly profit. And today we have this note coming out by Macquarie, and they're maintaining an outperformance. They've hiked the target price to 560 rupees per share from 520 rupees. Now they reiterate a constructive view on Delivery, and they have also added Delivery to their marquee buy list. Now they feel that Delivery is a cost leader in a complex tech-intensive business exposed to India's large e-commerce growth runway, and the company is fully funded. They expect a 20% 10-year revenue CAGR with strong scale benefits. They also expect the net profit to break even in FY25. Also, in the bull case scenario, they are maintaining a target price of 960 rupees, and in a bear case scenario, the target price is 300 rupees per share for Delivery. And on the back of that news flow and the brokerage note coming in for Delivery, we see an uptick of more than 1.5% coming on the counter.
All right, good moves on Delivery, but moving on, let's shift focus to what Gensol Engineering is doing. This counter is in focus on the back of the news flow, where the company says that they have raised around 900 crore rupees through a preferential round, where the company also says that this fundraise will be through the warrants convertible into equity shares on a preferential basis. And the major milestones comes at a juncture when Gensol is on the exceptional growth trajectory and is leading the green energy and the clean mobility revolution. Gensol has achieved significant advancements in solar EPC, EV leasing as well as EV manufacturing sectors, and the company's dedication in the innovation. And they have also set out the targets going ahead, where they are aiming for a 5x growth within the next 3 years across the divisions. And for this, the fundraise has been successful. The equity fundraise saw the participation from international as well as domestic participants, including the FPIs such as Elara India Opportunity Fund, Ares Opportunity Fund, as well as Stano Investment Opportunity Funds, etc. So on the back of this news flow, we are seeing good moves on Gensol Engineering stock, gaining around 8% in trade as of now.
Okay, that is stock number 13. But on that note, we're going to slip into a very short commercial break. Don't go anywhere. We'll be back with more stocks after the break.